gentlemen, and crypto kings. Yes, how has it been going, and what is my take? We did the Novogratz video. Many people coming out and saying Mike Novogratz is right. It is the bottom, and let's have that check-in with you. And in fairness to Mike, it hasn't been bad for him so far since he made his call. However, I want to caution against getting too optimistic here, gentlemen and ladies. But first of all, a little bit of an insight of what we've been doing. What we've been doing since that last video in crypto. Actually, we've been trading it in the range because clearly it has been in a range. So we took very fortunately after this upside move, we grabbed this first fractal inverted HVF. Nice flag there, held on. We were short from up there. Fractal, it's actually been a good little session, but period for us, but it's all small moves on short time frames. So this is just to keep your eye in essence, 15 minutes while you're waiting for what I believe will be a highly impulsive move. Just the direction really needs to be determined. So we've been in a low volatility squeezing time frame. There will be at some point an impulsive move. That doesn't mean that doesn't mean further range trading. The range trading will end with a squeeze and a pump, either up or a dump to the down side. And I suppose the discussion is, what have we been doing in the meantime with this up and down, and how's it looking now for whether it'll be down or whether it'll be up? And that's the question we seek to answer. So a little bit of what we've been doing on the shorter time frame first, and then we'll go out and we'll look at the big picture. So it did form a pretty decent, we call this, and you'll learn more about this on a program, the nestled inverted head and shoulders, where you actually get a fractals. With fractals, you get pairings of shoulders, and how it works often with HVF method as well. So you got potentially a left shoulder, first left shoulder right there in that little zig and that zag. And then you go down and you have a head, and then you get your right shoulder right there. And then that sniper entry circle is your entry long. You also get a deeper left shoulder here with a black neckline. You see the black neckline, and there was an orange neckline. So there's quite a bit of detail in here, so pay attention. So after selling off and getting our overperformance and closing as it was making marginally lower lows into the structure, we then realized that the structure is forming an inverted head and shoulders, which will be a reversal back up. You get targets generated. You first get the smaller head and shoulder, with that being the left shoulder. You see that luminous green on that one, and then the head, and then on that one. That was made quite quickly. Then you get quite a strong dip back. This formed an upside HVF, fairly flat bottomed along there, but then you get your funnel entry, high 3, low 3 there. That created a second interim and and a full target here, plus the bigger inverted head and shoulders target. That was pumped right through. And where did it pause? Where did it pause? In the funnel resistance of the previous performing inverted, but also invalidates its bearishness by sticking it through. We had also drawn and had from the beginning the 6-8 line, which is a critical level that's shown us. So we've got a 6-8 and then eventually a 7,000 line, which is there. And the 6-8 has shown critical a number of times, and has been a very, very interesting level. In fact, if I just go up a bigger time, I think it is let's talk about the 6-8. It's the inverted head and shoulders from the last lower fractal. So let's just, not daily, 4 hourly. Let's just show you that as one of the reasons why that 6-8 is significant, because you'll see the 6-8 referenced a couple of times, and I want it to have some degree of meaning. So ignore the mess that is that for now, and see the previous much bigger scale, left shoulder, head, right shoulder, 6-8 as neckline winding up to break you through the 7,000 level before we got our first inverted HVF fractal that broke all the way back down. You see that 6-8 and that significance. Back down to the shorter time frame we go. So then, having met and run the 6-800, what does it do? Smack down, support on the two clusters of targets there repeatedly on the inverted head and shoulders and the upside HVF, getting volatile, dangerous signal, and then spill. Where does it support after it's spilt? It supports, wait for it, in the funnel of the upside HVF. This is small, and the necklines of the inverted head and shoulders. Let's get yours truly out the way, and go and have a look in that a little closer. So there is the neckline of the inverted head and shoulders that made target. Here is the funnel, and this is where it's supported for a bounce. So we got this was up here for the targets being made, and that was your upside HVF. You also, when we were trading this, you got a break out of your HVF, and we got a second chance in. Some of my premium guys were able to get in there. We said there's a possibility of a second chance, speculate to accumulate. You've now got the fairly good certainty. There was a little bit of a primer in there. That means it tightened up a little bit. Let's drop a time frame and catch this more recent price behavior. You can see it in there, a high, a low, a high, a low, a squeeze, and a break. And then you get the revisit. And that in itself also was an element of a squeeze to squeeze up. See it there, boom, touches the target, shooting star back down, then smashes all the level, upside HVF fractal that then runs you to your 6-8 level, confluencing with that target 6-7-89, confluencing with a big 6-8. What do you get? Your shooting star through both those levels. That's your warning. You've got to get out of dodge again. Down, 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 descending grind, eventually a spill and support at this major points of levels. This is showing you price behavior trading to the level. So this is how we've been rolling on the shorter time frame, stealing small bits on small size. In this uncertain trend period, you've got to be prepared to be small bits, small size, and you've got to be ahead of the move. What most retail crypto trader will be doing that's just started is chasing all the pumps and getting in long here and being shaken out down here on the dumps. In other words, they always want in with the certainty of a pump behind them, and they're always wanting to get out in pain on a dump afterwards, or they will start shorting now after this dump. And of course, we get some support here and we might get some structure for a rally back up the other side. So always a move behind. You've got to watch that. Method is everything. And this is how we've been updating the premium guys. So you can see what's gone on there. Let's have a look at a bigger time frame chart. So the question, this takes us up to the big question, the Mike Novogratz question that everyone's already saying he is right on, that whenever it was, September the 13th was the final low. Where was that September the 13th? Let's see, what low was that? That was the 9th. So that spike down was the 19th. So he was somewhere in between here, near the low. Let's give him credit, near the low so far. Now, this is the structure of the inverted HVF that we've been warning about that could be looking like an inverted, behaving like an inverted, but at the last minute actually does 180 degrees and goes up. Now, one of the big things that supported that possibility was the outlier level of BTC shorts at that time. So in other words, we had a net short overall position. In other words, too much of the retail market was sitting there playing the short side, and there weren't very many people to be buyers. We were up here. Since then, the BTC shorts have come down to 28,000 when they were literally tapping out at 40,000, 28 from 40. So let's just say all the people aren't standing on the one side of the boat anymore, which is usually a sign that you need to be on the other side of the boat. Let's have a look in fullness for that at the BTC longs, and we do it again. So we're at 28 and longs are at 27. So actually now you have an even keel, half and half on either side. You don't have an extremity the other way, which is for the shorts. Ideally, you'd want that. You'd want everybody long, leverage long that needs to close if it starts going wrong. But you don't. They're basically at 27 and 28,000 each. You're about 1,000 net short. So that's in the middle. So this element of analysis as being highly extreme one way or another can be set aside. It's balanced. It's not clear that the retails are over bullish or over bearish. So going back to the chart that we were looking at on the BTC, here we are. Now, one of the key things that I always warn, it could be, so the direction is where we are sitting and saying, where's the ambiguity? It could be an upside, and that would be a first in a new trend, and I would anticipate then over performance. So that's where we are, and that would be where you would get your roughly a 9.2, where I'm guesstimating that our midpoint is going to be around here. Be clear at this moment. We can't say for sure, but it'll be approximate 9.2, and you would overperform to that if it's an upside. However, I want to say to you that when you have inverted HVFs, that's the downside break version. In other words, that was our founding low, that's our high 1, that's our low 2, that's our high 2, that's our low 3. In other words, green is for go on the low 3. So I'll make that line a little fatter so that everyone can see it, because I've got a lot of lines on the chart. That's your high 1, high 2, and that would be your high 3. That where it's green would become red. You often get what I call bear flagging channel as your third and final impulse. So what have we actually had? We had a descending capping line. You can learn about those on a program, free webinar, by the way, 3rd of October, on a lot of the key aspects to becoming successful as a retail trader. And as I say, actually done quite well. We traded south here. We traded south there. We reverted long here. And we got out at the 6-8 line. I didn't short actually overnight. I didn't want to do that going into a weekend. But we've actually taken some money out of this channel, and it's a little bit of nothing. But this is potentially, if you see the split there, there's a top line. Let me just put that. I'll put it in red just so it stands out a bit more. And just to also just caution that let's leave it solid. Otherwise it won't show. We've got a melee of lines there. That it is still a risk. It is still a risk. Yes, you have come off these lows, the Mike Novogratz lows in the sine waving, but this is a channel. This is a channel, and you didn't meet the top side of the channel here. You tapped out on a horizontal level. So you continually, when you're getting grind buying, that's in a little bit of an upward drift along the lows and the highs. Eventually, there's a point where it fails. It doesn't have enough zip. So it is a little bit of a cautionary that you failed at the 6-8. And it's come down rather brutally, it has to be said. So this was quite a bullish period. This was quite strong upside move, but it did meet the top of the channel. It came back down. You've had the channel there. We've trimmed the wicks. And then you're getting an up move that's failed here and has come steeply down. In fairness, it isn't totally on the bottom leg here either, the way I've drawn it, but it could still visit that. So it's not a guarantee bull at all. If you're asking me, where do I stand relative to the time I made the last video? Fetch the chart back, hit the space bar there, excuse that interruption. So we are in a channel. There's nothing saying you can't melt up out of this channel, but broadly speaking, your bear flag behavior, it is a big period of bear flag, and this was a pretty nasty sell into that channel. So typically on tactical, technical analysis, you've got a number of things that occurred here. You had a blow off rising wedge, which again, I'll also put in red there after making a few rising wedges. So there was a lot of squeezing and there was a lot of distribution going on across the top, tactical selling into the bull. You had an absolute extreme absence of bid and a plummet. And since then, you've been in a bit of a sine wave inside a channel. Now, this was sold off a bit brutally for the bulls. I would have liked, if I was ready to trade this bullish, which I am, I have pending orders in either direction, this to come off more moderately and have a primer, little continuation pattern, squeeze, and have a volatility squeeze after such a strong H2. It's a nice high move up relative to the H1. We could have had a fractal here of an HVF, and you could have popped and started your run. That would have been a nice high confidence method of triggering to the long side. What's actually happened is you've thrown it down quite narrow, so it didn't hold those heights for very long. Look at this impulse. At least you held, there was buying coming under, trying to hold it up, that gave you that sell-off, the opportunity that we took before it eventually sold. There was some breadth to this hill. This was a spike up and then a little bit of support at some key levels, and then it fell further overnight. So, but then on the bearish side, if we wanted an inverted fractal, in other words, a smaller little squeeze inside our funneling area, and this is our funneling area, guys. It's the 6-8, 2-9, and the final 3 low here after that high down at 6-3. So you've got a very defined level at 6.3 through to 6.829, 6.328.3 to 6.829. You've got roughly $500 that we're going to trade within now until we get a triggering event, what we refer to as a triggering event, either to the upside or downside. So the point at which you have confirmation of the triggering event, for me, utilizing our method, is the 6.826, and to the downside, you've got to start worrying already that the collapses on 6.320. And what happens next, it's still ambiguous. This is one of the most interesting patterns because it's kept it a little bit of a secret. Actually, the whole structure is still largely an inverted structure. However, it does happen. You get these rather deceitful near the end of trends, looks like a downside breaks the other way, which is why we can't go full-blown trust. This could be a wolf in sheep's clothing. It could be a bull in bear's clothing, for want of a better phrase. And likewise, but overtly, the structure of this pattern with the strength of the sell-offs actually accelerating the deeper you went in, and this rally largely being quite channel-like, is still got what the original video suggested, a potential to sell off to the downside. That is the primary message. However, what's changed since you last made it? Well, it's taken a while in coming, and it's not happened yet, and you've had reasonable test up, and this high point, if I look at the high point, so let's talk the things that might fluff up the bullish sense of the argument. This high point has got through the 50%, not through the 61.8. So you collapsed real hard down here. This is a fib retrace. Generally, I don't want the third high to be too strong because that shows too much new momentum pushing something up to the upside, which could then mean you're going to get the upside break. So what did you get? You got that high there. It's through the 50%. It did not make the 61.8. Now, that's also a bit of a halfway house. If it was up, we'd want it through the 61.8. If it was bearish, we'd want it below the 50 or below. And it's gone and sat kind of in between. So it's keeping us guessing for a bit. The overall structure of the macro pattern is bear, but we have also got to bear in mind that the 6,000 and 7,000 levels have largely been defended. Yes, I know it traded 5-7, but these the soft floor and the hard floor haven't been held below for very long without being pushed up. So we continue to see repulsion there. This you need the bigger time frame chart to actually see. And I probably need to put the key levels in right from the beginning for everybody to be able to see it. But that's 6.9. That's just about $7,000. Let's put it in blue as we do, and that's a key level of significance that has been the soft floor for quite a while, and then the hard floor, as I say, you're looking at the 59999, which is the 6,000, which is roughly there. So again, I'm filling the chart with lines. Let's zoom it in, but you can see that this has been defended once, twice, 3 times, 4 times. Eventually, if you're in the process of defending it for the 5th time, you could be, you've got to say that there's a strong seam of support there. But what I will also say is that this setup, the last time you're in this, so I'm still slightly more overall structure is a bear, and this is late beardom. I know that. I'm not entirely comfortable with that. The fact that you've come all the way from 20 down to these levels, and we're squeezing, and we're getting lower, but we're not making new lows. There's a lot to be said for the bottoming element of this. Eventually, this starts to leave you with bottoming DNA. Even if it just goes marginally lower lows a little bit, you start to get what's called rounding bottom. And this is why this has become such a 50-50 call. But what I would say, this channel is not the ideal recovery. This last time you traded lower where you were here, you got an inverted head and shoulders. Let's just take you into that. And that's where that 6-8 line came in. This was your low one. What did you get? Capitulation, final selling, a marginally lower low, then a failure to make a new low, and then an inverted head and shoulders that broke quite convincingly for the time. Didn't have the long run follow through, but broke quite convincingly. Those are strong candles. The issue you had is all these tops keep getting sold off back down, and you're getting lower highs all the time. So for something that's meant to be bottoming, we also have to be on the bear argument, saying, look at this. Look at this. Your descending triangle keeps descending on that. And I can change that color just to make it stand out a bit. Pretty in the pink. Look at that. He's wearing a flowery jacket. He may as well go the whole Monty. Pink all the way through to that low level. That's your descending triangle. So if I just get back into pull it around mode and pull it across, get out of the way a little bit, you can still see that lower high, lower high, lower high, lower high, and now you're coming to the key point. And this is the crunch. This is the crunch is coming. This is why I reiterate to you guys that this is a key event is not far away for Bitcoin. In other words, there's your descending triangle line. Okay, it was a little bit away from that one, but it's clipped all these highs. You are at a key point now. What's happening? And you've got this bear channel into that, and it's put up or shut up time. And I split up my channels down the middle as I do my wedges. There's a whole HVF method reason for that. But the point is you're getting a little bit of bid now that you're at the low end of the channel. You're going to start rallying. If you fail to make the upside of the other channel again and you start to squeeze, you could get a micro fractal upside HVF you can get in early on the break of the pink line. Or you can get even better on the funnel of the fractal if it's an upside, or vice versa if it's a downside. Maybe it bleeds out the low of the channel and starts to sit on the low end of this funnel and is being squeezed by the pink line and then rolls over to the downside. So, we've got a number of scenarios that can play out. And for now, actually, it's keeping everybody guessing because it's the whole thing. Structurally wise, with everything it's come into, still has that bear fur coat on. And unless we've got a clever bull that's playing deceptive, there is at least the possibility and the strong likelihood of a stab down that is quite high. I would say 50%, maybe more, that we get at minimum a stab down if we don't get the full break. So we get squeezed in. Maybe we go into this channel here. As we get to this pink, you get a micro fractal and you get at very least a stab down. This could be fatal for shorters, actually. That doesn't necessarily mean it's a good thing. It can do very much like it did here on the Bitfinex, where it did just through and got everyone short, and then it starts its pump journey. Could be an upside like that. That'll be fatal for you on the short side, because if you've oversized, you're going to get murdered and you're going to get stopped out. So you need to do your sizing. Don't be too aggressive. The key lesson is here. We've already seen that happen here with that candle. This is Bitstamp, by the way, the chart, but on Bitfinex, it actually chipped me short and I took a loss straight away because it reversed and pumped, and I realized I'd been done because I was sitting and it was almost, maybe it was too obvious an entry point. I did stack them some before and some just after, but all of them got filled. So it doesn't matter. You can only get so clever. If you want to get short round about a certain zonal level, your orders have got to be in and around that level. So that is the risk for the shorters. And it would be, so the value of having an either way bet will mean that at least you get long here, because whichever way it feigns and doesn't break, it can do that. Then at least you'll get the upside of the long breaks, but it'll be a bumpy ride. Better you on watching. Just make sure you have your orders in and and that they get executed properly. So there's a strong possibility of that. Or you get the squeeze and you go straight into the upside break. And for the first time in the pink descending triangle zone with the two floors, soft floor, hard floor, 6,000, 7,000 horizontal levels, pink descending line, you then get the first proper break of the succession of lower highs, lower highs, lower highs, each time dipping into the floor, soft and hard floors bouncing up, but never as far. This is, so that is more a descending triangle, although we have created some falling wedge structure here on the red sides. When you took individual segments of this price behavior, you did get falling wedges and breaks to the upside out of that. This could be called a falling wedge break. Overall, you're in the pink descending triangle structure. So that's it, guys. That's where I'm standing on this. We could get the full-blown, this needs to be in red. You could get the full-blown honest breakdown also out of a fractal, and that's it. You're off and away, and you head all the way potentially through 4,000 into a number that begins with 3 as well. So it's all up still for grabs, and the answer is, I don't have the actual answer for you. I'm as fascinated as you. And sometimes when you have those really unclear directionally trades, don't be too big. Don't become unholily fascinated that you have to be in. Trade small and wait for your what we call our just-in-time entries. Also, guys, pre-reg for our free mini course that we'll be bringing to you, that will come, and you can do that on the link as well. Second half of November, we will give you a free series of vids, no charge at all, just on concepts that you can take a look at on the link below. And there's the webinar on October the 3rd. Look at that. And in the meantime, I think D-Day is coming. We're caught between the pink lines and the blues. Something's got to give. Plus, we've got a short channel here where we've been squeezing along. We're in the business end of multiple fractals. Impulse move time is coming. It could be an either way. It could also, I didn't discuss, be a long pump everyone in long, just run through those highs and then dump as well. It's also a third option. I think slightly less likely if it's going to break in one direction in a fake sense. It's probably likely to be to the bear side. That's it. Speak to you all soon. Thank you for watching.